What's going on, guys? It's a red day for me. Not how I like to end the week. The week is green, but the day is red. And today I'm going to show you my trades, how I went red on the day, how I mitigated the risk, how much deep I'm into the red. But more importantly, I'm going to give you 3 tips at the end of this video that are going to help you identify choppy days. Check it out. All right, guys, as we jump into this day and this video, do me one quick favor, hit the like button, check out the link in the description and comment section. Apex right now is running 90% off your prop firm evaluation. First month is 90% off. Second month renews at 80% off. So in third month and so on and so forth for life of the account. As long as you're in your evaluation, you want to keep it going, it'll renew at 80% off, which is a monster deal. Make sure you take advantage of that down there. You get to keep your first $25,000 once you are funded. And then it's a 90% that you keep of your profits. Now, today I was trading account number 3. As you know, if you've been following me on this journey, I've gotten 2 accounts funded already with Apex. The first one was already officially done last week. The second one today, well, depending when you see this video, today, Friday, was day number 7. It's above the profit target of $9,000, so it will be funded here shortly as they send me my welcome email, my certificate, and then I pay for my data. All right, so this is account number 3. I've been trading now. Today is day number 3 or day number 4 of this account. And believe it or not, I had a feeling this account was going to take me longer to get past. Why? Well, because the market hasn't been that easy to trade over the last couple of days. It's been a little bit more difficult. So yesterday was a nice green day, and today is a red day. It's a small red day. I'm only down $632. Not a big deal, especially when you look at the overall picture. You know, I've been making banger days, $1,000, $2,000, $3,000, $4,000 days across the board over the last, 2 weeks, 3 weeks? So let me show you today. Today we open up here and we immediately chop around a little bit. We hit the bottom support here at 43.84 and take off that level. And then we find 43.92 resistance right in here, okay? That resistance was known and it's a little bit of a pivot resistance. We reject off that level, come all the way back down here. And I say to myself, well, you know, I'm gonna go for it. I'm going to take a starter position here and I'm going to add on the break of the low of day. Why? Because, well, that's a big support zone. And I think in my mind, I thought it was going to break. And if it broke, I thought we would go down to 43.50 zone. Obviously, you know me, taking profits along the way. So right out the gates here, I take starter positions here, a small little add, keeping it in that starter range, okay? And I'm looking for further downside. Here I had about 50% of the desired size I wanted, and I was gonna add the remainder if we broke down underneath the day's low, and then I was immediately gonna start peeling off profits, okay? But it didn't work. It didn't work right here. Get short, add. We quickly pop right back up over this little level here. And I'm like, okay, well, this isn't going to work. So I'm going to get out of it right here, right now. So it was a short, very short trade. I get out of the entire position right there. And just like that, I was down over $700 on the day. I was like, well, I'm going to watch. I'm going to wait. Let me see if I can find some sort of trend and momentum here. If I do, I'll go after another trade, but I'm going to be a little bit more selective. I'm going to look and wait for a breakout to trade instead of getting in ahead of time. So that's exactly what I did. Right here off this level, we pushed. We broke over the pivot of 43.92 and we went towards 43.96. Now here what I'm thinking is, okay, we should make a push to 4,400. I'm just looking for a few points. I'm not looking for anything huge. I go ahead and get long here, looking for that push over the highs. Didn't come. See how we pull back? Next candle, we break over this one, and I'm looking for that push to 4,400, which we got here. We didn't get it here. We struggle. I see a lot of selling taking place. I'm like, well, I'm not going to overstay my welcome. Today is starting to look choppy. We're going to go over my little telltale signs of ingredients on the chart that showed me that we were probably going to get choppy. I sell out of it right there. Book $100. And that puts me down on the day, $632. I'm like, you know what? I think that's it for me. I stayed and hung around just a little bit more, and that was it. Right around here, I think it was when I called it a day, around 10:45 a.m. I was like, all right, that's enough for me. And that was it. Red day. Hey, it happens. Can't be green every single day, okay? And I can't come back from a red trade every single day either, because if the market's not giving me what I'm looking for, right? It's not giving me my setups and my patterns, then I can't make it. I cannot force my will upon this market. Now, it's time for those 3 tips, and we're going to go ahead and jump into that, but there is a cost for admission for that. It's very simple. Comment in the comment section below. Let me know how your week went, and let me know any question you have regarding trading futures and or stocks and options. Now, here we go. The tips to spot chop. The first tip I want to share with you is you want to look for tapping top and bottom of channel with no clear break in very tight time frames. You could see here clear as day this morning. Resistance 43.92. Support down here 43.86, 43.84 zone, right? Come right back up. Resistance, can't break through. Come back down. Support, can't break through. So it's like, think about it as a crowd. They're trying to get into the store and they run. They go to the first door, bang, it's closed. They go to the next door, bang, it's closed. Oh God, what is happening? Go to the next door, run around the other side of the building, doors closed again. They can't get in and get that Black Friday deal because what? The store isn't open for business yet. The same thing. Like, you're not going to get continuations with the market's telling you, bang, you got clobbered. Bang, you got clobbered. Bang, you got clobbered. Bang, you got clobbered. At some point, you as a trader have to realize, hey, today might be choppy. These support zones aren't holding the best. They're a little bit choppy. These resistance zones are holding really tight. This is not looking very promising. So when that happens, you have to utilize your head. If you're going to trade, you might want to diminish risk a little bit, which is what I did here in these trades. Okay? The next thing you want to look for is when you do, in fact, break up and over the resistance zones. 43.92 resistance zone. We break it, take it back. Break it slightly, very small breaks, take it back. And we take it back hard, right? That is showing choppiness. You cannot break through the resistance zones, all right? Even here, look, we break out and look at this candle all the way to 43.96, all the way comes back down here and closes underneath 43.92 before going up again. That is chop. That is how you start to lose money really quickly. That is how you lose an entire week's profit in 2 or 3 trades if you're not careful and know how to manage risk. And that is how you blow up accounts, right? Look at this. We break up and over here. Another nice break through the levels of resistance, only to come on back down to 43.92. Only to go back up to make a new push to new highs, only to come right back on down. You have to keep eyes on those resistance levels. If they're not breaking and giving you extension to the upside, chances are you're going to not extend and you're going to start coming back down and maybe getting choppy. Okay? If you're coming on back down to the weak side and you're not breaking down, again, another sign that more than likely it's going to be choppy. Then the last thing that I'm going to share here with you, the last or third tip, is going to have to do with your metrics. Look at your time zones on your metrics. When are you most when are you most not popular? When are you most profitable? Whenever you're most profitable, that's a time zone you want to be trading in. Okay, whether it's 9 a.m., 10 a.m., whether you're profitable between, like me, 9:45 a.m. and 10:30 a.m., the most profitable, or 11 a.m., if you're most profitable in that zone, well, the closer you start to get closer to 11 a.m., the higher likelihood that your setups and patterns aren't going to be around. And if something pops up, the higher likelihood you're going to be red on that trade. So if you're noticing chop, and you're getting closer and closer and closer to your end of your time zone of your profit window, you might want to consider stopping trading for the day, which is what I did. Right around 10:30, I posted in the Discord, guys, I think it's just going to be a red day for me. We're fast approaching the tail end of my profitable time zone, of my profit window, and I'm not finding anything to trade. I don't want to go out there and force a trade at 11 a.m., at 11:30, and then go from, a very, very manageable $600 red day to a more serious $1,200, $1,300, $1,500 red day. So I said to myself, right around 10:45 a.m., the weekend is here, guys. Those are the 3 tips I can give you to stay safe from the chop zones. All right, guys. Guys, thank you very much for watching. Remember to check out the links in the description to the course, the DTC course on how to pass your evaluation exam for a prop firm trading futures, as well as the 90% off code I told you about for Apex. All right. Any questions, drop them in the comment section below. Remember to subscribe to the channel, hit that like button and notification. I'll see you on the next one. Peace.